Well, Eric Rosen here with another edition of the joint venture between 3i and the Rosen Report and the Founders Series. I can't tell you how excited I am to be with my dear friend, Alicia Levine from BNY Mellon. Alicia, welcome.
Eric, so great to be here with you.
It's always great to spend time with my good friend, Alicia. We see each other when I come to New York. When she comes to Florida, we get together. Sadly, I missed her recently. And it's funny, we met 18 months ago through 3i, and I think I reached out to you to do lunch, and you were in town. And if memory serves, your family was in Antarctica or something crazy doing where were they?
So my kids and my husband were in Antarctica over Christmas and New Year's, and I said, that's not for me. I'm
Nor
going
I.
to Palm Beach. So I headed to
that's right.
Palm Beach, and I thought, what a great way to meet other 3i members who maybe just have not a lot to do if they're in Palm Beach. So that's how we had lunch Christmas Day. Do you remember that?
I remember Le Bill Bouquet, I've been to Le Bill Bouquet 61 times, I think, and I've only gotten one thing on the menu, and that's the Cajun chicken. There's nothing else on the menu, in my opinion, other than that. I don't love the food at Le Bill Bouquet other than Cajun chicken. So we
Agreed.
digress. Well, I'm really excited to be with you today, and I know the followers and folks who tune in will be really excited to learn all about you. So I have to read this. Your background is so impressive that's actually a little scary. So let's go over it. Degree from Brown, magna cum laude. Pre-doctoral work at Stanford, a PhD in political science from the University of Chicago, a postdoc fellow at the Hoover Institution and Harvard. Massive underachievers or something, how does this happen?
I think I was a nerd. I was a nerd.
Wow.
And I just really like learning things. And, I watch my kids in school, and for some people, school just isn't that hard. You can figure it out. And for me, school was comfortable. I just kept on going, because it felt like a home. It felt like someplace I could excel. And I like learning things. So the nerd just took me a long way.
Wow. Well, I mean, listen, those are some of the best institutions in the country. And to get through them with flying colors and all those degrees is one heck of a story. So, wow. I always knew you were brilliant, but this takes it to a new level. So how did you find your passion for political science and war? What was it that brought you to that conclusion, to go that route?
So the interesting thing is, as a strategist, I look at markets and I look at stocks and bonds and all different asset classes. But I started my adult life actually in academia studying international relations, security studies, and what we used to call it bombs and bullets. And, it's really, I was fascinated by it in college. I kept on going at Chicago. But really, we have a really interesting family history. My mother's a Holocaust survivor. And I think ultimately, why I was so interested was really trying to figure out how in the world did the civilized world get to that place, right? Where there's something like the Holocaust, where the world was at war for 6 years. There was evil, and it was clear there was evil. And I was trying to answer these existential questions, really, and they're not easily answered. We see what's going on globally right now. These are not easy questions. And unfortunately, I don't think the profession has done a great job in helping us with how to get through bad moments like this.
Wow. I mean, incredible. So you have all these degrees in political science, papers on war, and then you end up at a hedge fund, a world-class hedge fund like Angelo Gordon. How does one transition from writing theses about war and political science to a hedge fund? How did that come about, and talk about your time at Angelo Gordon?
So look, it was a great story. I mean, in the end, being in academia is about doing research and asking the right questions, right? Everything starts with the right question. And so I was about to start an academic job at Johns Hopkins when my father called me and said, before you go to academia, I'm really proud of you. He never went to college. He had like 6 months of Brooklyn College and dropped out. He said, I'm so proud of you. But before you go, why don't you come to my hedge fund and let me train you? And if you like it, you'll stay in Wall Street. And so that's the kind of thing that a father-daughter conversation, it's just incredible, right? So I said, you know what, Dad? You're right. And I was trained by him and his partner, Bob Sussman, who had been at Soros. It was a long-short equity hedge fund. And I learned the business. I did everything from trading to research to managing a smart portfolio to being the healthcare analyst. And as you know, in the day, in these small funds, you did everything. And so it was
That's
the
right.
greatest learning experience. And so I took that kind of, I really want to understand more about this thing. And I just put it to stocks or companies or disease areas. So that's how I wound up there. And I was pretty good at some stocks. And then I ultimately wound up at Angelo Gordon in marketing. It was a great team there. And there I learned the alternatives, but they didn't have somebody doing kind of more macro because they were bottoms up fundamental investors.
Right.
So I said, I can write. So let me try this. Let's see if this works. And so I started writing sort of macro papers about different investment opportunities, Asia real estate, bad banks in Europe, sort of distressed debt in the US. And so that's how this happened.
Amazing. Now, how long did you work with your dad before you made the transition to Angelo Gordon, which is a world-class hedge fund that was really known, that had a big distress group, that they were always, as you said, a bottoms-up fundamental. I don't really view them as an equity shop. Maybe they've done that too, but it was really a lot around bonds and credit and real estate, and they had a world-class team over there over the years, and I know a lot of the folks who worked there.
So I was with my dad, I think, for about 12 years. And then it was just time to move on. It was a small, long, short equity hedge fund. And the two partners were like thinking it's sort of the fun times are over. And so I moved on. But I had a great understanding of markets and currencies because I invested in a bunch of different market cycles. I started in the dot-com boom. So the greatest fun ever, by the way. And so, at Angelo Gordon, I was in marketing and we did chart books and we did just thinking about capital markets and how to better communicate with our clients what's going on in capital markets and why does that mean that the funds we're offering would be great for them right now. And that was kind of the role I was in. So a little bit broader, more marketing, fundraising oriented, but in the end, the intellectual part, like what's going on with the macro that we want to be doing, European real estate right now.
That's great. So now you're at BNY Mellon and you have a few roles. You have head of investment strategy, chair of the investment strategy committee, and you're also head of equities. So what does that mean on a day-to-day basis? What are you doing? How much time are you with clients? What do you do?
So look, I love my job. And as you know, the head of strategy role in wealth management, you spend a lot of time with clients and you spend a lot of time messaging. So, my day starts early, like 5 a.m., drinking from the fire hose. What did I miss, in the 6 hours that I was asleep? Global markets, checking everything. It's really kind of compulsive and I can't stop. So the day starts like this. We do a morning call 4 days a week with all the wealth managers. There are about 300 people on the call every morning. I'm either hosting it or I'm a speaker on that call, which sort of sets the tone. And then in the end, I'm responsible for asset allocation. So, I lead the investment strategy committee. We do all asset allocation, including privates, including different kinds of alternatives for our clients, depending on the client size. And we decide sort of where clients should be invested for the next 12 to 18 months. Like, we're not a hedge fund. We don't trade. So you really have to get the long run call right as you look ahead. I'm with clients, I want to say 30 to 35% of the time, which I love. I travel the country. Every time we're texting, I'm like, I'm in Utah. I'm in Cleveland. I'm in Dallas. Yep. But the clients are great. And what I love about the clients is many of them have operating businesses in the real economy. And so you learn so much, like what's going on, not just in the financial world, but like what's going on in Texas in the oil fields and the Permian Basin, and you hear what's happening in these companies and with labor and with wage increases. And so it's kind of a nice feedback loop because I learn from it. So I love the clients. And then equities was how I started on Wall Street. We do thematic notes, thematic investing, and it's all been good.
If you had one part of the job that you like more than everything else? I know we always speak and you love what you do. So what's your favorite part of the job on the day-to-day basis? And I don't think it's waking up at 5. So what is it?
It's not waking up at 5. And by the way, if I could change that, I would. I'd say that what I loved about academia was everybody sitting in around a room and just sort of open conversation on whatever the topic was and sort of the room being smarter than any one person. What I love about my job is when I can get that moment with colleagues or across the industry where you're thinking through, where are rates going? Is there a chance actually the Fed's not going to cut but could hike? What's the probability and how do we position for that? And so those tables where everybody's just free expression, there's no hierarchy, sharing ideas, I love that. I think we all get better doing that. And so that's I have a few meetings like that a month, and those are the ones I cancel everything for because I think it's great.
Fantastic. Yeah, those are always fun meetings. So you do a lot of TV. Actually, you just came from filming just before we're filming this. And so I know I've seen you multiple times on Bloomberg and CNBC. What do you feel that you're best suited to discuss, and what are they generally calling you for specifically when they want you on the show?
So great question. I was actually just on Fox Business now, so we've added that as well. It's really interesting. My dissertation was on the breakup of empires. I'm really good at big picture, right? Where is this going? And, what's the big idea? What's the trend? And how do we get it right for our clients? And so I'm pretty good at on the Fed, inflation, where the risk is, what's priced into the market, what's not priced into the market. If you're under allocated, what should you be doing today to kind of take advantage of some price dislocations? So that's what I talk about on air. But inevitably, there's always oh, is NVIDIA going to go up today? Or it's always the question of the day. And it's a little bit of work to kind of just steer it back to, look, these are long-term decisions, and we want to talk about where there's mispricing. And so that's what I like talking about.
Well, I mean, NVIDIA goes up every day. It's going to be a $55 trillion market cap stock at the rate it's going. I put in November of 2022, I wrote a piece in my newsletter about AI. And I said, this is going to have a huge impact faster than anyone knows. Now, in my infinite wisdom, I bought 0 shares of NVIDIA stock, which is up 14,000 times in the last 18 months. So although I had a very good call about AI changing the world, I had a very bad call by not buying any stock around it. So with your comments about rates, just a few short months ago, the market was pricing in 6 cuts in 2024. And I think today it's roughly 3. And I know the Fed is speaking now, Chairman Powell is speaking, so it might alter it a little bit. But where are you, if let's just say the market's predicting 3 cuts by the end of the year, where do you think it shakes out?
So I think that if we stay where we are with the economy, which is better than expected, I think you're at 2 to 3 cuts for this year. I think it's the summer. We were shocked at the messaging, frankly, in December from the Fed going all out dove on us when the inflation battle isn't over. The market was pricing in 6 cuts, as you said. The really fascinating thing is that hot CPI print and all those Fed speakers coming out there and trying to smash those 6 cuts ideas, the market repriced with barely a whimper in the equity market. So some folks thought that there was going to be a dislocation in equities if the bond market had to reprice to fewer cuts. It just didn't happen here. So I think the Fed cuts, I think the economy's better than expected. And I think it'll be later. And I think the next inflation print is going to be, it could be pretty volatile depending on what it is, because January was hotter than expected.
And so a lot has been talked about market breadth, and there was a Magnificent Seven, and I know there's a little bit of a shift going on with Tesla out and NVIDIA in, but you and I have spoken about the breadth improving, but still not where it needs to be. So can you educate the followers about what exactly market breadth means and where you see us on the pendulum of market breadth?
So the interesting thing is that market breadth, for instance, just in the S&P, is better today than it was 6 months ago. Because 6 months ago, it really was 7 stocks carrying the entire index. And last year's 25% was carried by 7 stocks, and it was responsible for something like 21% of that 25% return. Right. So as you said, that Magnificent Seven is kind of fracturing. There's only 2 or 3 of those stocks left still performing year to date. But what we've seen is everything else catch up. So healthcare, industrials, financials, hello, who would have thought financials would be great year to date? But they are. And so you're seeing a broadening in the market. So I actually think the market's healthier now than it was. There's been a call for small caps, and actually a lot of 3i members, we have this ongoing conversation about whether we think small caps can rally. Small caps are still 20% below their old high of 2021. NASDAQ just caught up last week to its old high of over 2 years ago. I don't think the market's really stretched here. I mean, it would be great to have a sell-off a little bit just to consolidate. But in terms of the fundamentals, I don't think we're stretched. And the breadth is better.
And do you think that we're going to see a catch up in the Russell, or you think they're going to continue to lag?
It's hard to love the Russell. It just is, right? Because half the companies don't earn. And those companies that don't earn are funding their growth with floating rate debt. And as we know, with Feds not cutting right away, and even if they cut 3 times, rates are still higher to refinance that debt. So I think you have to be careful. I don't want to write off the asset class, but I think you have to play this in a really careful way. Know what you own. But those that can fund their own growth and have earnings are actually doing quite well. I mean, small cap industrials are doing well. So I'd say, in the end, it's impossible to take the Magnificent Seven trade and put it into the Russell, because the Magnificent Seven are 5 times the market cap of the Russell. Yeah. The S&P is over 14 times the market cap of the Russell. So, yes, be part, diversify, know what you own, but there can't be a rotation here. It's impossible. It's not, the Russell's not big enough.
So, okay, so let's talk about, do you have any non-consensus call for the rest of the year, or a market surprise that you think could happen next year? We got an election coming up with 2 geriatric candidates that are going to be a pillow fight to the finish. So is there anything around the election or a lot of geopolitical risks? Blinken said we haven't seen this much geopolitical risk in over 50 years. So is there a surprise that you could see that no one else is talking about right now, positive or negative?
Look, I think a pretty negative surprise would be if the next 2 inflation reads are higher than expected, and not only does the Fed not cut, but may have to hold, and maybe then there's a conversation about, do they have to hike again? I don't think that's a huge risk. I think it's a tail risk, but I think that's just not priced into the market at all. And I know there's talk that rents were the reason that CPI was hot for January, but the economy's running hotter than expected. And the disinflation is really being led by goods deflation. If there's more heat in the Red Sea and the goods pricing comes up a little bit, you could see a situation where you get a couple of reads. So I think it's a tail risk, but I think the thought that inflation may return is not well priced into the market. And that's something that would be quite bad. I think there's a risk that neither party, if it's these 2 candidates, again, anything could happen. There's some risk that neither candidate gets 270 electoral votes in November. That would not be good for markets. You have third parties.
I'm actually writing about it in today's Rosen report. I did not know exactly what happens. I don't have it in front of me, but if neither candidate goes, you've got to go to Congress and you got to go to the Senate for the vice. Like, it's this whole process, which is very, very interesting, because there's more talk of Kennedy and potentially Haley going to no labels or running as an independent. And then I think if you had 4 candidates, it would be I could definitely see where you might not get to 270. So very interesting. My non-consensus call 1 year ago was that Michelle Obama would be the Democratic candidate, and she came out this morning and basically said that's not going to happen. I thought that was going to be the case, but it does not look like I was right.
What's really interesting here is whichever party gets the candidate to withdraw, that party wins the election. And it's kind of interesting. Like, you're in this situation where it's like this death match. 70% of the population doesn't want either of these 2 candidates, and they're holding on. And I kind of don't know why the DNC or the RNC doesn't say, look, we want to win the election and do something about it. So I think you could get to a not 270 either. I mean, look, Bobby Kennedy Jr. is pulling from Trump voters and from Biden voters. So it's really a wild card. And in the end, our system is a plurality system in the state level. It's not a majority system. So you could really mess things up here in terms of the vote count. What happens if the Senate is Republican and the House is Democrat and they have to pick a vice president and a president this way? I mean, it's crazy.
Yeah, I read a little bit about that today. And it's interesting, whatever, probably 30 years ago, 1992, Ross Perot, I think, had 19% of the popular vote. I don't think he got any electoral votes, or if he did, it was very de minimis. And so you could get popular vote, but no electoral vote. So it's a crazy potential scenario, which we'll see how it plays out. So you've been a member of 3i for a couple of years. Can you talk about what your favorite part of 3i is, and how you spend your time when you're with 3i? And by the way, I think you're in the 3i offices doing this call, which is generally where I sit when I'm in New York when I do these things. So talk about 3i for us.
So I love 3i. First of all, our friendship is developed from 3i, but other friendships as well. And the great thing
No, you don't have any other friends from 3i but me.
No. Oh,
there's no sharing here. So it's Eric and Alicia. There's no other friends allowed in the friend group.
Only if you make me more cookies. But I have run into people that I know from my career on Wall Street, and it's amazing to reconnect. And of course, the teams always organize dinners for members in particular cities. I love that because we always talk about investment opportunities and, again, non-consensus thinking. And the reason I joined was to be around people who were not doing what I do every day. Like, it's going back to what do you love about what you do is talking to really smart people who share different ideas and perspectives. So that's what I love. I love the watch meetings, the deal meetings where you go in person, because you pay, I think for me, a little ADD, just pay closer attention because you're there and the investors are there and you can ask them questions. And I actually just did my first investment because I was in the room and I thought, wow, this PM has really picked up on something that resonates with me. And truthfully, I think if I hadn't been in the room, it's just another layer in between. So I love 3i. I love the members. I love everybody. And I like going to different cities and meeting people there, such as you.
Well, that's right. So what I do is I use the Slack channel. I'm going surfing again at the Kelly Slater Wave Pool next month in April, and I am going to go to LA. And I reached out to Eric in LA, and I said, hey, I've got lunch and breakfast free the 15th and 16th of April. Let's get some members together and get together. So we're going to do that. And I look forward to meeting these new people and experiencing their city with them. So, every one of these, I end with my Rosen Report hat on. So we have to do that, which you have one as well. I know I gave you one of these. But
I have a white and orange one for Florida. Yes, white and orange for Florida.
It's always great to be with you, Alicia. You're always a fountain of knowledge, and your background is so interesting, and you're so charismatic. It's so much fun for me, and I always learn something. So for that, I really appreciate you joining the 3i Rosen Report Joint Podcast of the Founder Series, and I hope everybody enjoyed it. And I look forward to seeing you soon. I'll be in New York in a few weeks, and we're going to get together.
Thanks, Eric. You're the best.